Today we are going to be looking at Broadcom stock, the huge recent announcements, and also as of this July 19th. And also we shall do Broadcom fundamental analysis, equity research report, and I also walk you through the setup for Broadcom heading into this week. And I also take you through a few things that are happening and also to make sure that you understand what to do before Monday opens. So this is Dr. Wilson, and also I'm be taking you in this video. Please like, share, and subscribe for more like this. Now, looking at the market conditions, the story for Broadcom this year has been a study in contrasts. The stock closed Friday at 370.83, down about 0.97% on the session. It traded in a range between 357.8 and 377.35 on Friday, and that number tells you a lot about the volatility this name has seen. Now, AVGO is down roughly 22% from its June high, $495, and it's down about 5.47% over the past month and down about 7.29% over the past week. But zoom out and the picture changes dramatically. The stock is up about 7.54% year to date, up about 30.4% over the past year, and up a staggering 325% over the past 3 years. So the 52-week range is $273 to $495. So the market cap currently sits about 1.76 trillion. And this is what makes this setup so fascinating. The business itself is executing at a level that almost no other company in the world can match. But the stock has been getting crushed on margin concerns and sector rotation. So this is the classic great company, frustrating stock dynamic. Now let's start with what's actually happening and has happened this past quarter, because the earnings picture tells you everything about why this stock and this company is so highly valued. Q2 fiscal 2026 results ended May 3, 2026 were absolutely blowout numbers. Revenue hit 22.187 billion, up 48% year over year and beating analyst estimates of 22.13 billion. GAAP net income came in at 9.31 billion, up 88% year over year. Non-GAAP net income was 12.074 billion. Non-GAAP diluted EPS hit 2.44, beating the consensus estimate of 2.4 by 0.04 and representing 54% year-over-year growth. Now, adjusted EBITDA was a record 15.244 billion, representing 69% of revenue. Cash from operations hit 10.493 billion and free cash flow came in at 10.262 billion, an incredible 46% of the revenue. Now the semiconductor solutions segment generated 15.009 billion in revenue, up 79% year over year and representing 68% of total revenue. And here's the number that really matters. AI semiconductor revenue hit 10.8 billion in Q2, growing 143% year over year. And that's not just growth, that's a hockey sticky growth. And the infrastructure segment generated the remaining 32% of revenue, driven largely by VMware acquisition that has transformed Broadcom's business mix. Now let me talk about guidance, because this is where things get even more interesting. For Q3 fiscal 2026, management guided to revenue of approximately 29.4 billion, and that's 84% year-over-year growth. Non-GAAP operating income guidance is approximately 67% of projected revenue. Adjusted EBITDA guidance is approximately 68% of projected revenue. CEO Hook Tan said the momentum guidance, and in Q3 we expect semiconductor revenue from AI to grow over 200% year over year to 16.0 billion, and that's right. AI revenue alone is expected to be $16 billion in Q3. That's more than the entire company's revenue was just a few years ago. And the full year fiscal 2026 is projected to reach approximately $106 billion, up from $63.89 billion in fiscal 2025, a 66% increase. EPS is projected to hit 11.62 in fiscal 2026 and 19.42 in fiscal 2027. Now, looking at the Apple deal, on July 6, Broadcom announced an expanded 5-year chip partnership with Apple through 2031. So Apple accounts for about 20% of Broadcom's total annual revenue, and this deal addresses a long-standing overhang of AVGO shares, the fear that Apple would completely replace Broadcom chips with their in-house silicon. So the extension cements Broadcom's role as an indispensable partner for complex custom radio frequency components, Bluetooth, and Wi-Fi architecture. So this locks in a highly predictable baseline stream of high-margin hardware revenue for another half-decade. So also the Google TPU partnership, Morgan Stanley analyst Joseph Moore, who ranks in the top 2% of analysts on TipRanks, expects Broadcom to retain around 80% of Google's TPU business over the long term. He views fears on MediaTek displacing Broadcom as premature. So Broadcom's scale, HBM supply capabilities, and packaging execution makes rapid displacement highly unlikely. So this positions AVGO as a close number 2 to NVIDIA in the broader AI ecosystem. Now looking at the analyst sentiment, because this is where things get really interesting. According to 48 analysts polled by S&P Global, Broadcom stock has a consensus rating of strong buy with an average price target of $523.73, implying roughly 41.23% upside from current levels. So the target range from a low of $215.88 to a high of $650. So recent analyst moves include Morgan Stanley's Joseph Moore reiterated his buy rating on July 14th with a 502 price target, calling Broadcom's a core AI winner. Bank of America maintains a buy rating, and average price target across 54 analysts on MarketWatch is 525.71. So the mean price target of 516.59 indicates a 32% upside. Now, let me address the risks because I want to be honest about them. There's margin risk. Broadcom guided for gross margin to decline to 74% in Q3 from 77.1% in Q2 due to a greater mix of lower margin AI semiconductor revenue. So this raises concerns that profitability may not scale as quickly as revenues. So the non-GAAP operating margin guidance of 67% is stable but not expanding. Also, we see competition and valuation concerns, then customer concentration, whereby Apple accounts for about 20% of total revenue, and any disruption to that relationship would be devastating. So for anyone thinking about options this week, given where implied volatility is sitting right now, especially with earnings coming up in early September, premium is elevated, and that creates both opportunities and risks. If you own shares, selling covered calls in the $430 to $450 strike range for August or September collects meaningfully premium while still leaving room for a recovery move. So if you want to add shares but want some margin of safety, selling a cash secured put around $340 to $350 gets you exposure at a cost basis that's close to recent support levels. So seize whatever you can do appropriately. And the dates I'm looking at are September 3rd, which is like the Q3 earnings, and that's an estimated date, and also the real moment of truth. The company has guided for approximately $29.4 billion in Q3. If Q3 shows AI revenue hitting the $16 billion target, if margins stabilize, and if management raises the full year number again, this stock has a clear path higher. and average price target is 523.73, which implies a 40% upside from current circles. So fundamentally, the stock has a timing problem right now, not a business problem. The market is worried about margins, worried about competition from media tech, worried about valuation. But the underlying business is executing at a level that few companies in the world can match. And when a company is growing AI revenue at 143% year over year and guiding to 200% growth next quarter, the market eventually figures it out. So I'll be back probably soon for an update as Monday opens and which direction the tape is leaning. Let me know any questions that you have for me. And also remember that God says to fear him and give glory to him, for the hour of his judgment is come. Let us worship him, who is our creator, who made heaven and earth and the seas and the fountains of waters. That is Revelation 14 verse 7. It is a warning to us to worship God and not worship any other God. Please see you in the next video.